But we closed the S&P 500 for the week at 6,300 and let's just say 90. And that is a new all-time high weekly and daily close. A lot of folks were looking at 6,350 as a resistance level, but the market had other plans and blasted right through that. If we bring up our RSI and mean reversion, you can see that the RSI is fairly elevated at these two peaks we've had. And if we compress our timeline, the last time that we had RSI levels quite this high was around July of last year. We spiked just a bit higher, and then we had that yen carry trade low. So I'm not saying that we're going to have another correction like that. That was a fun sleepless night that night. But we are getting very overheated on the RSI, and it's important to remember that just like the RSI staying oversold, doesn't happen for very long amounts of time. It usually rebounds really quickly. When it's overbought, that also usually doesn't sustain for very long. So I would just be ready, especially as we're getting into a slower period in terms of seasonality, for weekly consolidation at least, and perhaps a bit of a correction between now and September. It's just something to be on the lookout for. I've covered it before, but these are the times in the market where everybody's euphoric that funds and bigger players like to throw us a sucker punch, as I called it in the last video, to catch us off guard and shake some folks out of positions. If we look at the NASDAQ comparatively, it's actually not as overheated on the RSI as the S&P 500, and it underperformed this week, where this whole rally up, the NASDAQ has generally been outperforming. We are in this rising channel here, which statistically generally break to the downside, but we can stay in a channel like this for quite some time. So we just need to keep our eye on the S&P 500, as a lot of the names we cover here are more tied to this indice, and we saw that underperformance most likely in our portfolios this week, despite the S&P 500 doing well. My personal portfolio returns were down for the week. Moving on to gold, and we just covered this one because when gold rallies, it's more of a risk-off mood in markets, and when gold drops, it's more of a risk-on mood.